Money has been with us for thousands of years. Its job is simple. Good money lets people trade. It stores value, it measures value, and it can pay debts. To work well, money must be scarce, easy to divide, easy to carry, and last a long time. Most of all, people must trust it. Today's money is fiat. It is not backed by gold or silver. Central banks can create it at will. Banks add more when they give loans. This keeps inflating the money supply. Over time, the value of each unit drops. Bitcoin was created in 2009 as a response. It is digital money with no middlemen, no banks, no governments. Instead, it runs on open software and a global network of computers. Its key feature is scarcity. There will only ever be 21 million bitcoins. New coins appear through mining, but the reward halves every 4 years. This makes Bitcoin more rare over time, the opposite of fiat money, which has no supply limit. Why does it have value? Because people see it as a store of wealth, a hedge against inflation, and money that crosses borders freely. Some call it digital gold. Like gold, it is scarce and outside government control. Unlike gold, it moves at internet speed. But Bitcoin is not completely risk-free. The price can swing wildly up and down, regulations may change in different countries, technology itself is young, and while the network is secure, people can still lose coins if they mishandle them. There is no bank to call if you make a mistake. Also, Bitcoin is still not used everywhere. Its value depends on adoption continuing to grow. So, why do investors still keep some Bitcoin? First, for diversification. It does not always move like stocks or housing. Second, for scarcity. Only 21 million coins ever. Third, for liquidity. You can trade Bitcoin anywhere, anytime. And finally, for growing acceptance. More institutions see it as a serious asset each year. Bitcoin is not perfect. It carries risks just like any other new technology. But it is also a big step in the story of money. The first form of value that is digital, scarce, and decentralized. In short, money built for the internet age.